In today's video, I'm going to teach you how to record purchase invoices and their impacts on accounts in Xero. We'll walk through creating a bill in Xero and, just as importantly, what that action does behind the scenes in your accounts. By the end, you'll know exactly where to click and why it matters for your financial statements. Start by signing into your Xero account and landing on the dashboard. From here, look for the plus icon near the top of the screen. This is your quick create menu. Click it, then choose Bill. In Xero, a purchase invoice is called a bill, and this is where you'll capture expenses from your suppliers. You'll now see a bill entry screen. Choose the supplier from your contacts. If the supplier isn't set up yet, you can add them on the spot, but if they already exist, selecting them will autofill any defaults you've saved, like due dates or tax settings. Enter the bill date and a clear due date so cash flow reminders work correctly. In the reference field, add something meaningful such as the supplier's invoice number to make searching and reconciliations easier later. You can also attach the PDF or image of the invoice to keep a complete audit trail in one place. In the line items, describe what you're being billed for, add quantities and unit prices if applicable, and most importantly, choose the correct account from your chart of accounts. This selection controls the accounting impact. If it's an expense like office supplies, pick the related expense account. If it's something you capitalize, select the appropriate asset account according to your policy. Set the correct tax rate to ensure your sales tax/VAT is recorded properly. If you use tracking categories for departments, projects, or locations, apply them here for accurate reporting. Now decide how to finish. If you click Save as Draft, nothing posts to your general ledger yet. It's simply stored for review with no impact on reports. If you click Approve, Xero posts the bill to your accounts immediately. Here's what happens. The expense or asset account you chose is debited, the tax portion is posted to the tax control account if applicable, and accounts payable is credited for the total, moving the bill to awaiting payment. You'll see it in your bills to pay and on aged payables, which helps manage cash outflows. When you later record the payment, accounts payable will decrease and your bank account will reduce by the amount paid, fully clearing the liability. Until then, the approved bill reflects money you owe and the cost you've incurred. That's it. Create the bill, enter accurate details, and approve when ready to post. This simple workflow keeps your expenses, taxes, and payables precisely in sync in Xero.